Nothing could be finer than living in Carolina.
Learn more. Save money. This is the Carolina Real Estate Podcast.
Interviews with experts in building, designing, selling, and financing Carolina homes.
Learn more. Save money. This is the Carolina Real Estate Podcast.
Neighborhood and home tours. Experts who know the area.
Learn more. Save money on your next real estate transaction. This is the Carolina Real Estate Podcast.
Now, your host, Bill Macchio.
Here we are for another edition of Carolina Real Estate Podcast, and I'm excited to have with us Elizabeth Purry. I want people to get to know you a little bit. Like, how long you've been in the business, and what company do you work for?
I'm not going to tell you how long I've been in the business, Bill, because I don't want to date myself. But I have been doing this since I left college. It was my first job out of college. I've been in the mortgage industry the entire time. So I absolutely love mortgages. Everything about them, getting people into their right home where they're comfortable with their down payment, they're comfortable with their payment, and it really feels like home to them, not just a loan.
It's funny you should say it, because I talked to a friend of yours and a realtor friend, and she said that you find a way to help somebody if you really want to help them, don't you?
Yeah, it's really about just putting the customer first and, making sure that they have that good experience. And if they want a home, I will find a way to make it work.
You're my guest, and so I should not disagree, but I'm going to disagree because I think you're good because you're very passionate about what you do.
Oh, you're sweet, Bill. Yes.
No, that's what drives all expertise, right? Is like, I'm passionate about podcasting and doing my magazines. When I called you about being on Carolina Real Estate Podcast, and you were nice enough to join me, I talked about the feds didn't reduce the rates, but the rates went down this past two Tuesdays ago? I can't remember exactly.
December 11th.
Yeah. And you said that that's a misconception, that that people don't understand the process. Can you please explain that for us, please?
Sure. So, mortgage rates don't always follow the Fed rate. The Fed rate is 5.25-ish right now. And mortgage rates are, in 6.5. So they're higher than the Fed's reserve rate. And, your credit cards follow it. Your home equity line will follow it. But mortgage rates, while it's a good indicator of where things are going, they don't always go hand in hand, skipping down the road together.
So just because the interest rates don't go down doesn't mean that the mortgage rates won't go down. Right.
So, interest rates are based off of, so many different economic factors. And, the really big things that you can follow is inflation and the employment rates. So especially inflation now, right? Yeah. So if we get good economic data, it's actually bad for interest rates. We get bad economic data and it's good for interest rates. So it's flip-flop. As we enter into 2024, what do you think is going to happen? Well, I definitely think that, if history repeats itself, and typically in economic data, that happens all the time. We're in an election year. Interest rates will continue to trend downwards. Now, if we're sitting 6.5-ish now, how much downward? Like we said, no one's got that real estate crystal ball to really know. But I think that we'll definitely see a rates improvements throughout the year. I was surprised that the Feds talked about, they even put a number on it. They said that they might go down as much as 3 times next year. I found that incredible that they even said that. Right. And I think that that's just giving people, that glimmer of hope that they need to, have good feelings about the economy and where things are headed in an election year. So you think a lot of the not only that the inflation's down or more under control, but you think the election will be a good indicator that the interest rates are going to go down? Correct. But you have to think, Bill, so let's take a $500,000 home, a loan amount. And let's say the interest rate is 6 versus 7. you're talking $330 difference in that monthly payment. So, the $330 is, a lot, but it's not life altering between, a 1% interest rate move.
What I find interesting, when whatever the sector is that we're talking about, when things are a little tougher, entrepreneurism rises its head and different programs come out. In your case, you have a lot more choices now as a mortgage originator to offer prospective home buyers, because the interest rates are a little higher than they've been. So people get creative in how to distribute the money, do they not?
Oh, absolutely. So we've got temporary buydowns, and that's where the seller goes to pay to buy down your interest rate. It could be for a year, could be for a year and a half, could be 2 years. We've got, like you said, lots of programs to make that happen. And points in the mortgage market are really becoming a huge savings. People can pay a point towards their loan. So, sometimes that'll get that interest rate down an eighth, a quarter, sometimes a half. Just really depends on that customer's financial profile. And that's long-term savings for their loan.
Be part of the conversation surrounding Mount Pleasant. Sponsor the Mount Pleasant Podcast. Podcast marketing is the new, powerful way to brand your business and reach your customers. For more information, visit carolinapodcasts.com or call 843-345-7012.
You're watching the Carolina Real Estate Podcast.
I heard that there's a loan package out there that the seller can actually participate in that will reduce the mortgage rate for the buyer. Is that true?
Yes, that's that temporary buy down that I was just talking about, that the seller can pay to reduce the borrower's interest rate for either that first year. You can go up to 3 years in the loan.
So is a lot of buyers doing that, or a lot of sellers taking that into consideration when they get a buyer?
I think that in certain markets they are. Right in the Mount Pleasant market, we're not seeing a lot of that right now, just because the demand in Mount Pleasant is still so high.
Rumor has it you're kind of an expert in loans that can help with remodeling a property.
Yes, Guarantee Rate Affinity has got some great, construction to perms. They've got remodel homes, those types of things.
What is the incentive for y'all to have that?
Guarantee Rate Affinity has got just a plethora of loan programs. We've got a doctor's loan. We've got a second home loan. We've got jumbo loans. We've got, down payment assistant loans. I think that in today's mortgage market, to deal with a mortgage professional, you've just got to have that umbrella of everything. Because so many clients are looking for so many different things. And if they can just go to one person that's a one-stop shop, that's a lot easier than going to 5 different mortgage lenders for different types of products.
So, Elizabeth, I was surprised, way back when in 2008 or before 2008, the statement loan was a big thing. And I never thought in a million years that would come back. And that raised its head not too long ago, right? Isn't that a substantial way people can get a mortgage now? Could you explain what I'm talking about?
Sure. So there's lots of different loan programs where you can use bank statements as your income. You can use 12 months to 24 months. You can, if you're buying an investment property, all you need to do, you don't have to show your bank statements. You don't have to show your tax returns to qualify. You just qualify straight off the rental property for that home.
How long did it take when the interest rates started spiking? How long did it take for these creative packages to start hitting the market?
Well, we've had a lot of these bank statement loans and what they call debt service ratio loans and those types of products for a long time. But interest rates were so low that a lot of people didn't need them. So they weren't really in a lot of, forefront of people's minds. Now that interest rates have increased, that affordability factor on that debt to income ratio, especially for self-employed people, has definitely, sometimes been challenging.
Let's talk about the big picture in mortgages. Well, buying houses, not just mortgages, buying houses. When people say that real estate's not a national trend, it's a local trend, but what are they talking about?
For our Mount Pleasant market, supply and demand, there's just nothing out there a lot of times. We've still got tons of people moving here. A lot of people that are remote are wanting to be here in our climate, and they don't need the industry to back them up. So, and then other places, let's take Goose Creek. They've got a little bit more supply than we do here in Mount Pleasant. So it's so localized.
Well, that's true about the whole Carolina coast, though, not just Goose Creek or Mount Pleasant. That's all these islands. It's, Myrtle Beach. It's McClellanville, right? Georgetown. So when it's local, and there's certain things that pertains to that local market, opposed to the same house in Missouri is going to cost differently than the same house here. So I just think that you can't look at the national trends and think about it as your market. Your market's your market. Our market's our market, right? Carolina coast is our market, and therefore, it's you got to understand what's going on in the market. That's why realtors are so important.
Absolutely. They're just the key to the setting up a client for success and a happy home.
The real estate agent, even with technology the way it is, anywhere in the world, they are the gatekeeper of new people moving. Through your eyes, what's the difference when you first started than now? What would you say the top two things that are really different from when you first started?
The disclosures piece. When we first started in the industry, I think a closing package was maybe 20 pages long. Now somebody, has sued someone along the way, so they came up with a new form and a new form and a new form. So I think the disclosure piece, to make it more seamless for the clients, so they really, really understand what goes on behind the scenes versus, 20 years ago, they didn't know. They didn't know you couldn't discriminate against them or understand what the cost of credit was and those types of things. Now it is put out there in plain English. And I think that's just a great thing to do for the client, to just have that transparency. I hate that lawsuits happen, but I really do feel it happened, for the betterment of everyone.
Not just in Mount Pleasant, but along the Carolina coast. What do you think is going to happen in the Carolinas as we go forward in 2024? In your opinion, this is your opinion, but your crystal ball says what?
Yeah, so I think 2024 is going to be a great year. I think that, I think there was a little bit of hesitancy for a lot of buyers that they thought that maybe interest rates were going to get down in those, 3-4% ranges. And, we're just not going to see that in 2024. It's like waiting for Haley's Comet. They're going to be waiting for forever, and they're never going to be able to buy a home. So what I think is that if a client is accepting of these current interest rates, we're going to have more and more of those people that are comfortable with that housing payments. They've saved the money. They've saved the down payment. They know exactly what they want, where they want to be. And so I think a lot of people have got those plans in motion already at the end of 2023 to go in really, really strong, to have a good, strong market in 2024.
Do you find people's attitudes or opinions about the market is negative or positive right now? Or is it getting more positive? What's that look like through your eyes?
Oh, I think it's definitely positive. People are definitely more open to, the current market of a 6% interest rate. It's becoming more normalized. And they understand that even with interest rates decreasing, potentially in 2024, the opportunity to refinance is pretty strong.
That's what I hear a lot of mortgage people talking about, that you might pay that 7% now or 7.5% when it was high, although it's not that high right now.
Right.
But when it was that high, that eventually you're going to be able to refi. For the industry in general and for the homeowners in general, that's the thing to look at, correct?
Correct.
Yeah.
You've got that opportunity to save on that mortgage payment down the road. And I also think, with the Fed increasing the Fed rate, a lot of people are paying that in credit cards. I talked to a client the other day. She said, my credit card just at 32%. And I'm like, why don't we refinance this, get this into a 6%, and, you can get out of this monthly debt and take advantage of a monthly budget that is going to benefit you long term.
See, that's what this realtor that I was talking to said you're really good about. And that's what a mortgage banker should be good at, not just getting a mortgage, but helping the person that, is finding a right mortgage banker is the same as finding a good realtor. You just need somebody that cares. You know what I mean? I think that what's happening, and you just verified it to some extent, is people's attitudes are getting better. And as we go into 2024, I think it's the election year too. Isn't the election year one of the reasons you think the interest rates are going to go down?
Absolutely. I mean, historically, if you look back since, I think, the 70s, when we started really, really tracking interest rates, you can look on the charts every 4 years, dip.
Right.
So I think that's, even though I'm, sometimes the economics of mortgage interest rates is way above my pay grade, I think that that's a pretty solid thing to go on.
One last question would be, if you're thinking about buying a home, whether it's an investment property or whether it's your first home buy, when it comes to finding a mortgage banker, what do you look for?
So I think experience in today's market has got a lot to do with it. I think that someone who truly puts the client first and wants them to have a good experience for their home. It's not just about the monthly payment. It's more about how they live. And also someone who's got a lot of different products. You don't want to be with just someone who could offer just your vanillas. Because a lot of homes on the market right now might need, that rainbow swirly that comes out.
I heard that you were really good at doing 1099 self-employment people, stuff like that.
Yes. So the majority of our business here in Mount Pleasant is that jumbo loan. And most of our clients that have jumbo loans have got some sort of self-employment income intermingled.
But you could write loans anywhere in the state of South Carolina, right?
Correct. I'm licensed all over the state of South Carolina.
That's awesome. Well, thanks. You were great to work with. I called you up the last minute because I really wanted to get something at the end of the year, and you were right there with me to do this. So thanks. And I hope we helped somebody, Elizabeth. That's what it's all about, right?
Absolutely. Thank you so much, Bill. You're amazing. I love your energy. And I think 2024 is just going to be an amazing year going forward for housing.
I do too. I really do think our real estate friends are going to have an enjoyable year coming up when it comes to business and finding people homes. But anyway, thanks for joining us, Elizabeth, very much. Okay. And hey, you have an awesome 2024. Okay.
You do the same. I appreciate it. Have a great one, Bill.
All right. Bye-bye.
You've been listening to or watching the Carolina Real Estate Podcast with Bill Macchio. Want to know more?